Good morning, friends. Good afternoon, good evening. I'm not really sure what it is where you are, but this is Jason from TheChartGuys, and I'm going to be doing a little video review of the last couple of days of alerts action. Someone in the last video asked me to talk a little bit more about price shears and how we can use those, so I'm going to try and do that. Although, obviously, this isn't going to be the best case for price shears, and I'm going to talk about why that is and what scenarios you'd expect to see price shears be more effective in. So first coin I want to look at is Ethereum, 15 minutes, of course, on GDAX. And we had this really cool volatile drop yesterday around 5:30 Pacific time. And it's sort of out of nowhere. We just saw a huge influx of bearish pressure pushing the price down really fast. And because we were in a downtrend for quite a while already on the 15-minute time frame, the average is trending down. So when you get an average down and a downside price shear, it's not going to be as effective as if we're in the opposite direction. And what I mean by that is if the average is down, the price shear is going to be more responsive when it breaks bull. So really that's what we're looking for. It's going to be downside consolidation and then a bull break, and then you get a very effective, very accurate price shear. When the trend is overall bearish and you get a bearish break, your price shear is not going to be as effective. So we can see that playing out here when we had this bear break on Ethereum. We can see that quick move to the downside. Our first indicator is going to be that abnormal volume. So anytime you get an abnormal volume indicator or a price shear indicator, both of those mean get to your computer, something's going on. Those are what you need to remember, okay? Always be watching for price shears and abnormal volumes as an indication that something volatile is happening in the market, or in the case of abnormal volume, something very potentially could be brewing. So it's a little bit more responsive, but not quite as accurate because price shear is responding to actual market conditions, whereas volume is telling you that something is coming. So abnormal volume breaks down. We get our 15-minute price shear, key indicator that you need to get to your computer because there's going to be a bounce opportunity, and we see that play out in an oversold climax alert. Now we did see a 15 and a 30-minute oversold climax, and I did jump in on both of those opportunities. Obviously, we blew right past them as we often do in crypto, but we really nailed that 1 hour oversold climax. So what we do is we stagger our entries. We take a little bit here, we take a little bit there. That way, if we keep going down, we get into deep hourly or 4-hour oversold territories, we still have a little bit of a position that we can take in order to average that bounce and play it out. So 50 minutes and 30s blew right through, caught that hourly, and just a beautiful correction. And we come back up, and now we're in this little equilibrium pattern here. It should be playing out nicely. So a lot of opportunities. Abnormal volume, price shear, those are indicators to get to your computer. Bitcoin, same time frame. This time we see it a little bit more responsive. If we scroll out, we can probably see that Bitcoin has been a little bit more friendly as far as downside activity goes. So for that reason, our price shear is going to be a little bit more responsive, even though we're breaking to the downside. So we see our 15-minute price shear as the price moves rapidly down. We do see our abnormal volume kick in here. I didn't want to clutter the chart up too much, but we had our price shear, our abnormal volume, and then right around here, and I see that I've moved my arrows around, we get this 50-minute climax oversold, and then we also get the 1 hour climax oversold right near the bottom of this pattern. So again, huge break. Price shear and abnormal volume is your early indicators to go look at your charts. Oversold climaxes for your bounce entry opportunities, and then a nice follow through there. Litecoin, same time frame. We're looking at 15 minutes here. We can see that we started to break bear. In this case, Litecoin is a little bit of a market leader here, and we see that at the same time we get that big bear break, and because we've been trending down, we don't get a price shear, but we do get abnormal volume. We get multiple oversold climax alerts. And we can see here our abnormal volume indicator, as indicated by this little yellow arrow, was our main indication, a main heads up that we need to get to the charts and take a look at things. So, moral of the story, how to use price shears? You're going to be looking for them as indicators of quick volatile market movements. So you're not necessarily going to buy immediately when you see a price shear, but it's an indication you need to get your computer and take a look at what's happening in the market. There's a volatile move, and when you have volatility, you have oversold bounce opportunities, you have bull break consolidation opportunities, and you have so much potential that you can get and take advantage of that volatility. So look for those price shears as indicators of nice continuing bear breaks or really strong, powerful, quick to snap up bull breaks. Either side, you're going to have oversold and overbought opportunities. Excellent trading environments. Love the volatility. Love the price shears. and just keep on using them. Add them to your toolkit if you haven't already. They're absolutely wonderful. So I'm going to keep this short. Have a great afternoon, evening, day, whatever you got, and I'll talk to you all soon.